Hey there, everyone! Welcome back to our channel. If you're new here, I'm so glad you found us today. We're diving into a fascinating topic that's been making waves in the investment world, the Grayscale Bitcoin Trust, or GBTC for short. Whether you're a seasoned investor or just starting to explore the world of cryptocurrencies, understanding GBTC can give you a unique perspective on how to gain exposure to Bitcoin. So let's get started. So, what exactly is the Grayscale Bitcoin Trust, and why is it such a big deal in the world of investing? Well, let's break it down. First off, let's talk about what GBTC actually is. Grayscale Bitcoin Trust is an investment vehicle that allows investors to gain exposure to Bitcoin without having to buy, store, or manage the cryptocurrency directly. It was launched by Grayscale Investments in 2013 and has since become one of the largest institutional holders of Bitcoin. The trust operates as a publicly traded security, which means you can buy shares of GBTC on the stock market, just like you would with traditional stocks. Each share of GBTC represents a specific amount of Bitcoin. Currently, it's 0.0009425 BTC per share. This means if you own one share of GBTC, you indirectly own a fraction of a Bitcoin. Here's how it works. Grayscale buys Bitcoin and holds it in a trust. They then issue shares to investors, allowing them to participate in Bitcoin's price movements without needing to deal with wallets, private keys, or the complexities of securing cryptocurrency. Now, let's look at some numbers. As of late 2023, Grayscale holds over 600,000 Bitcoins in its trust. That's about 3% of the total Bitcoin supply. This makes GBTC one of the largest holders of Bitcoin globally, which is a significant point of interest for institutional investors. But how do investors benefit from GBTC? One of the key advantages is that it provides a regulated environment for investing in Bitcoin. Since GBTC is a security, it falls under the regulations of the US Securities and Exchange Commission. This gives investors a sense of security, knowing that they are investing in a product that adheres to regulatory standards. Moreover, GBTC offers investors the potential for tax benefits. When you hold Bitcoin directly, you might be subject to capital gains taxes upon selling. However, investing in GBTC allows you to hold it in a tax-advantaged account, like an IRA, which can defer those taxes until withdrawal. This is a significant advantage for long-term investors looking to maximize their returns. However, there are some important considerations to keep in mind. One major downside is the premium that GBTC shares can trade at compared to the underlying Bitcoin value. For example, during periods of high demand, shares of GBTC have traded at a significant premium, sometimes over 100%, compared to the actual Bitcoin price. This means that investors could be paying much more for GBTC shares than the Bitcoin they represent. Conversely, in times of lower demand, the shares can trade at a discount, meaning that investors may find themselves owning shares worth less than the Bitcoin they represent. It's essential to keep an eye on these price fluctuations and understand how they can impact your investment. Another point to consider is the management fee associated with GBTC. Grayscale charges a 2% annual management fee, which is relatively high compared to traditional ETFs, which typically charge around 0.5% to 1%. This fee can eat into your overall returns, especially if you're holding the investment for the long term. So, who is GBTC designed for? It's particularly appealing to institutional investors, hedge funds, and those who want Bitcoin exposure without the hassle of managing it themselves. Retail investors looking for a straightforward way to invest in Bitcoin might also find it attractive, especially if they prefer trading on traditional stock exchanges. Let's not forget that GBTC is just one of several Bitcoin investment vehicles. There are other options available, such as Bitcoin ETFs, which have gained traction in the market. However, as of now, the SEC has not approved a Bitcoin ETF in the US, making GBTC a popular choice for those looking to invest in Bitcoin through a regulated framework. To give you an example of GBTC's impact, during the 2020 bull run, GBTC saw massive inflows of institutional investments. This influx not only drove up the price of GBTC but also contributed to the overall rise of Bitcoin prices. It showcased how GBTC can serve as a bridge for traditional investors looking to enter the crypto space. So, to wrap it all up, the Grayscale Bitcoin Trust offers a unique way for investors to gain exposure to Bitcoin without the complexities of direct ownership. With its regulated structure, potential tax advantages, and the ability to trade on stock exchanges, it's an attractive option for many. However, keep in mind the premiums, management fees, and market conditions that can affect your investment. If you found this video helpful and you're interested in learning more about Bitcoin, cryptocurrencies, or investing in general, don't forget to hit that subscribe button and give us a thumbs up. We'd love to hear your thoughts on GBTC. Have you invested in it? What are your experiences? Leave a comment below. Thanks for watching, and we'll see you in the next video.